How's it going, everyone? Hope you're excited. The first video this week for earnings, we're talking about IBM. One that I told you I'd be talking about. Obviously, this is a company I do have a position in, so definitely one that's worth looking into. And we're going to talk about these earnings and see what's going on with it. So you can see as a result, we saw a pretty big jump after hours. At one point moved over 6% up. Pretty high reaction as a result here. And leveled out around 2.46% up in after hours trading. So definitely up, but it was a little volatile in after hours, as everything is in the entire market. But let's look at these earnings and see what we've got. Non-GAAP EPS here. Sorry, with throat. It gets a little scratchy still, okay? Of $3.35 is a beat by 6 cents. Revenue line coming in at $16.7 billion, down 18% year over year. Let's be clear, the company's declining revenue, almost steadily here, but it's a beat by $740 million. So actually quite impressive in terms of a beat, but I'd like to see a better year over year line there. And for an EPS standpoint, I like when a company shows me the GAAP EPS, because the non-GAAP, let's be clear, it's not necessarily fraudulent, because there are some restrictions they can kind of finagle the numbers in, but it's not accurate. Okay, a GAAP EPS is a lot more accurate to really determine profitability. It really is. So let's look at the net income line. Obviously, we want to see what that looks like. Software revenue is up 8%, including a 5-point for incremental external sales to Kyndryl. If you didn't know, the spinoff to Kyndryl that happened is kind of crazy. They're IBM's kind of selling some of their businesses off, kind of revamping. Consulting revenue is up 13%. Infrastructure revenue is flat. Nothing crazy there by any means. The hybrid cloud revenue, which is what you like to see, there's no way this is down 18%. I'm not buying it. We'll look at it actually. That is what the main story point is here. That's why the stock jumped where it did. The cloud revenue here up 16%. Obviously from IBM Watson. You got a lot of great stuff going on here. And obviously cloud is still the future. Let's be honest with each other. Cloud is significant for really every company. This is kind of the thing, okay? On a consolidated basis, full year cash from operating activities was $12.8 billion. Nice to see it. Free cash flow 6.5. The company still does a great job with free cash flow. That's why I like it a lot. You look at that and you look at the dividend they're able to post. It's pretty nice, which we will get into obviously too. What else do we have? It's a press release. Hope you're excited on this. We love a press release. So we increased revenue in the fourth quarter with hybrid cloud adoption, driving growth in software and consulting. Obviously, as we saw, pretty nice to see. There we go. This is the real line here. Revenue of $16.7 billion, up 6.5%. That's what I was talking about. Seeking Alpha, you're a dirty, dirty liar. You're a dirty liar. I knew it had to be up because I followed this company for a while, and there's no way that was down 18%. So, really nice to see in that aspect, for sure. The other lines here are actually accurate from what they had. For the full year, hybrid cloud revenue up 20% year over year. Really nice to see that. Really nice to see it. Pre-tax income here of $2.9 billion is up 183%. But that is including a 167 point impact from a fourth quarter of 2020 charge for structural action. So is it really fair to compare it? Not necessarily, but still, we're taking it. We're taking it all day, baby. Net income line, that's the line I like to see. $2.5 billion when you look at a GAAP standpoint. Really nice to see that. Year over year, 107%. We take it. Again, there's a benefit there, as they mentioned, but it's pretty exciting to see. From a software segment, they kind of pointed to a few couple things here, including the hybrid platform and solutions and transaction processing. You can see what they're able to do there. I mean, nothing crazy here of 8.2, nothing crazy. From the hybrid platform and solutions standpoint, we see Red Hat up 19, automation up 13, data and AI up 1, and security down 2%. Nothing crazy there. Anything crazy here? Really, nothing wild. Nothing wild. Yeah, we'll look at the balance sheet. Obviously, it's what we do because what we love to do. As far as expectations, the company will discuss the expectations during the quarterly earnings conference call, which I haven't had a chance to listen to yet, but I'll be very excited to look at that and see what they expect. Obviously, they won't give anything too concrete, I don't think, just because they won't. So here's the balance sheet year over year. Total current assets in at 29.5 compared to 39.1 billion. Quite a big decline here in cash, and you see it really in every position nearly where the decline's coming from. Cash and cash equivalents down nearly, over half. Short-term financing receivables, that was also down. Just a lot of downward here. Assets in general, same kind of story. 155 last year, sitting at 132 billion now. It's not what you'd like to see. So I'm curious what that looks like. Obviously, could have been used to pay off some debt. Let's hope. Oh baby. Total current liabilities at 33.6 compared to 39.8. Obviously still outweighs. Don't like to see that from that standpoint. I don't like to see it. And liabilities, they did fall quite a bit, but not quite as much as the assets fell. 113 compared to 135.2. So shareholder equity did fall by about $1 billion, 18.9 compared to 20.7. The balance sheet's not in a ridiculous standpoint. It's not crazy good or bad. Let's just be blunt with each other, but it's not something I'm that upset with. I'm personally pretty okay with it. So not anything I'm too upset with. So for the full year, I think they get full year lines on here. Maybe they don't. Maybe not. They didn't have the full year on here. That's okay. We'll be fine. We'll be fine. So for Q4, obviously you saw 16.7. Full year revenue line, I think it falls. Look, I'm pretty sure it falls right around $50 billion. It's between 55 and 60 billion. I don't remember where it lines up actually, all things considered, which is wrong of me. But we looked at valuation. This is a company still trading in a market cap only of 115 billion. P ratio is dirt cheap even after this, especially after this. It's going to be actually even cheaper. And the dividend yield's still incredible, over 5%. I like IBM as a hold stock. I don't think I love it for share appreciation, but I think it's a very good value play in a time in which the market's really trying to catch up with some of these value plays. Still year to date down 5.31 since the start of January, and the last year up 13 is not too bad. But if you look over the last 5 years, down 24% on this stock. It's been nothing incredible for shareholders. I like the dividend yield though, so I'm going to hold on to what I have and maybe buy some more if we see opportunities arise. I think the value's there, but that's what I got for you. Hope you have a good one.